Continuing this trade, we were long at 26.50, and we did have a stop line pullback opportunity, which is right here approximately at 7.50 or 7.75, depending on where you wanted to enter. The reason we would have taken this trade opportunity was based on the fact that our stop was originally about right here, which was approximately tick, 2 ticks below the stop line. Now we are moving it up because we set the pullback trade, and we should not be testing that level again. Now, the reason we did not exit the trade and go short right here on this potential pullback opportunity to the downside was because our 4-range chart was still uptrending, and also our 5-minute chart was as well uptrending. So this is confirming that we should stay in this trade, and any little blips of red we should somewhat not take as a 100% reversal point. Now, when we are in an uptrend, we want to put less, less kind of strength into a 5-minute breaker to the downside in an uptrend when you have the ability to pull back to something like a 50-day on a 1 minute, which is right here, or on a 1 minute, which is right here, and you had the positive cross on the 1 minute, so we expect a pullback and continuation to the upside. If you do look at the 5-minute chart right here, we did technically break this low. We closed at the low. Then we broke this low, and we continually kept closing up at that level, and then we broke up above this bar, and we closed above it. So that's why we did not exit this trade early, and we stayed in it because we expected a pullback trade, which was our re-entry opportunity right here. Now, if we get stopped out on this trade, you are guaranteeing yourself a 1.25 on this trade, which obviously right now you can take 2 points, but we're guaranteeing ourselves a 1.25. And the goal of this system is to stay in trades as long as possible and try to exhaust the trends as much as we can. So this situation, we did not get stopped out on this pullback. We were expecting a stop line pullback entry opportunity. So if we did take profit anywhere in here, we were expecting to re-enter the position upon a situation like this, which was pretty ideal. All of our other indicators were saying to stay in the trade. The 4-range was positive. The 1 minute, the 1 minute regular, and the Heikin-Ashi, we did not set lower swings. We continue setting higher swing lows. So this position is still working out fairly well. Now, the way you might want to play this, which is a pretty loose stop, is to place your stop below that swing point, which obviously you're giving up some few ticks on this trade, but we don't expect it to trade down there. If it breaks that level, we are definitely going to have more of a short bias. So to play it more conservative, that okay, we will at least secure a 1.25. We'll play it. We'll set the stop at 27.75, which is a 1.25 on this trade minimum that we could secure. And if this continues going up, we'll stay in the trade and keep trailing this stop line. When we do get flat stop lines like this, we do actually expect to get stopped out of positions because this does signal a range. So when we're in a range like this, we should get stopped out. But if this does continue, then we will stay in the trade and continue trailing the stop up as we did earlier right here, which is a perfect example. We entered right here at 650 with the initial stop at approximately 550, 525. So you start out with a 6-tick stop loss, and you continually keep adjusting this to the upside. And we adjusted this, up to about 2 ticks or so below that stop line, which was 725. We usually like to have it about 2 ticks for a little bit, give it a little bit of leniency for the pullback entry opportunities. But since we don't expect this swing to be broken, if it does get broken, we will have more of a short bias. So we'll either get stopped out at 775, continue trailing this up, which is what we would like, and if this does continue going up, we'll keep adjusting our target up higher and higher until we do finally get stopped out on this position.